At this point, we have calculated equity value using both approaches. We've laid that out here. The next step is to get to equity value per share. Ultimately, if we scroll up, the share price as of the latest close was $600.04 for Apple. We're trying to figure out whether, based on the DCF approach, that valuation is merited, whether the market is trading at a premium or at a discount to fair value. And so that's what we're going to calculate next. The final step that we need in order to really figure that out is to calculate diluted shares outstanding. Now, you'll see in a moment that, like most companies, Apple has stock options and restricted stock that may need to be considered. But Apple doesn't have other potentially dilutive securities like convertible debt or preferred stock. So we're also including videos later on in this chapter from the thorough review of dilutive securities that we go through in our comps course, so that you can see how to model every major type of dilutive security, even if Apple doesn't happen to have it. Okay, so we're going to calculate diluted shares outstanding. Understand that we actually start with the latest basic share count. And of course, I alluded to this in prior videos. The latest basic share count currently in the model is actually referencing a somewhat out of date share count. The three-statement model has the latest basic shares outstanding as of September 28th, 2013 from the front cover of the 10K. Here's the 10K, here's the front cover, and this is that latest share count of 899,738. That's this figure right here, 899,738. But of course, several quarters have passed. In fact, we're in Q2 now, and we have a new share count disclosure from the company that's closer to the current date, which is May 19th. It's 861,381. So what we're going to do is this is as of April 11th, 2014. So we're going to actually replace the number that we have currently in our model that was just pulling from the financial statement model. We're going to copy and paste that in here. Let's just shift the decimal places. Again, I'm using boosts. For those that don't have it, you'd have to just hard code a period in there. And so we're using millions for share counts as opposed to the full number here. Latest basic share count. And in fact, it's probably a good idea to include that this is from per Apple Q2 as of April. I forget what was the disclosure. Oh, sorry, the wrong filing. As of April 11th, 2014. So let's copy and paste that in here. All right, so now we have the latest basic share count as of May 19th, 2014. And now, as we've talked about in prior videos, when you're trying to figure out what is the appropriate amount of what's the right share count to use and trying to go from equity value to equity value per share, we want to use the diluted share count, and we want to, as opposed to the basic share count. And in order to calculate the diluted share count, we need to try to identify whether there are currently any potentially dilutive securities for Apple. The potentially dilutive securities are, of course, options, warrants, convertible securities. So this is our task now. So let's start with the basic shares outstanding as our starting point, and we'll just reference it from above, that 861. And then we're going to see, are there any dilutive securities? So the first securities to look for are options. Those are usually the big potentially dilutive securities for most companies. And options for Apple, let's start with their latest Q. 10Qs usually very limited disclosures for options. And so I'm actually, the keyword that you always want to use when looking for options is the word exercisable. Let's spell that right. So here we have stock options, and it directly takes us to stock options. If you just say options, you might have to click next a few more times. Stock options directly gets you there. So here you have a disclosure, and in fact, all of the company's sort of benefit plans, stock plan disclosures are here in footnote 9 for the 10Q. So you have disclosures for stock options that basically tell you they have 2.4 million stock options outstanding with a weighted average exercise price of $157, substantially all of which are exercisable. So this gives us a little bit of information. Now we know that 10Ks tend to have more detailed information about stock options, so let's just sort of check what's in the 10K. In fact, a lot of times you sort of have to go to the 10K because you don't get any disclosures in the queue. So it's almost a habit to go to the 10K for options data. And so here we see far more comprehensive disclosures for stock options. But what we need, of course, is to figure out whether there's tranche-based data. Does Apple provide option tranches, in which case we could sort of look at each individual tranche and say, okay, this one is in the money and exercisable, so I should include this in the diluted share count, whereas this one isn't. And so making those assumptions, you actually need a full tranche-based disclosure. Unfortunately, over the last several years, fewer and fewer companies are disclosing options detail in the level of detail that they used to. And that's primarily because companies are moving away from stock option disclosures, stock options as the primary form of incentive-based, of stock-based incentive plans to restricted stock and that sort of thing. So it's becoming a smaller, perhaps a less important part of stock-based compensation than it was in the past. But in any event, here are the disclosures that we have in the 10K. They're telling us that as of September 28th, 2013, they have 4 million exercisable options at a weighted average exercise price of 140. So you only get one tranche. So you really only get one tranche. And if you go back to the 10Q, you're getting virtually the same information. You're actually just a little bit more recent. You're saying there's a weighted average exercise price of 157 instead of 140. So that's a little different. And they're telling you that all 2.4 million stock options outstanding are exercisable. So it looks like the stock options that are outstanding have declined a little bit. It looks like it's gone from 4 million exercisable options to 2.4. So there's no reason to go back to the staler 10K data. A lot of times there is a good reason to do that. So instead we're going to take the 2.4 million stock options outstanding. We're going to put that in here, 2.4 million. And let's go back to the right filing. We have weighted average exercise price of 157.93. So now the question is, should these exercisable options, in other words, they presumably pass through all their vesting restrictions. Remember, not all options are exercisable. Options typically are issued with a vesting schedule. For many companies, the vesting schedule is, pro rata or equally over 3 years. So the 2.4 million options that are outstanding for the company are presumably have all passed their vesting restrictions. The exercise price, the average exercise price is 157. Since we don't have a tranche by tranche breakout, it's sort of either you assume full exercise of all of these or none of these. And so is this in the money? Well, it is certainly in the money because the exercise price is less than the current share price. So we need a test in here that says if the exercise price is less than the current share price, which is significantly higher, then you are going to assume that these exercisable options are indeed going to be exercised. Just because they're exercisable doesn't mean that they're exercised. Imagine if the exercise price was $900. Well, certainly no one in their right mind would exercise at $900 a share. So if it is in the money, what's called in the money, where the exercise price is less than the current share price, then we exercise. Otherwise, we do not, and there would be no exercisable options here. So the total proceeds, remember, when we think about options, when someone exercises their options, and if we assume for the purposes of calculating diluted shares that the Apple shareholders, the Apple option holders will exercise their options, they would be exercising 2.4 million options at $157 average exercise price, which would lead to proceeds. In other words, Apple would actually receive $379 million worth of proceeds. And now, even though 2.4 million options become exercised, meaning 2.4 million shares of new common stock have to be issued, well, with the $379 million in proceeds that Apple will get, The treasury stock method assumption for calculating diluted shares outstanding assumes that those proceeds do not just increase the cash balance, but instead they're immediately used to try to mitigate the dilutive impact of those options. And so $379 million at $600 a share will buy you 0.6, will enable you to repurchase 0.6 million options or 0.6 million shares in the open market to again try to mitigate the dilution of this 2.4. So let's just sort of get the decimals here, apples to apples. So you have 2.4 gross dilution, but net of the repurchases, you have net dilution of 1.7. And so this is the dilutive impact from options. And now in the next video, we turn to other potentially dilutive securities.